Hello, good morning. Hello, good morning. Welcome to Success VIX Group. Today, I want to show you how to set up indicators to trade boom and crash. So these are the indicators you need to set. Exponential moving average set to period 200, apply to close, color black, and the function of it is it serves as support and resistance. That is its basic function. So let's go to our chart. You click on F. You press moving average, then you write, you type in 200 exponential. Method is exponential. The apply to close, then the color black. You can leave it at 3 pixels, or you can change it, but 3 pixels is okay. Then click on done. Then you see it on your chart. Now the next is simple moving average set to period 48. Apply to close. Simple. Now please note the first one is exponential. This one is simple moving average set to period 48. Apply to close. Color yellow. It is used to determine the major trend of the market, whether for crash or boom. So to know the major trend of the market, to know the direction, whether it's a sell market or a buy market, you will use this indicator, simple moving average 48, set to period 48 rather, apply to close, color yellow. Please be careful with that information. Then click on F plus, moving average, then the period is now 48. Then the method is simple, not exponential, but simple. Then the color yellow. The last column in the second column, the last color on the second column, yellow. Then click on done. Voila, you see this is yellow. So this is the 48 yellow, please. This is 48 yellow SMA. This is the 200 EMA black. So do you get that, guys? So the next one is on the list is exponential moving average set to period 22. Apply to weighted close, HLCC, high, low, close, divided by 4. The color is pink. It is used to know the end of retracement. It also helps you to know when a pullback in a major trend is over in all time frames. Now, this exponential moving average 22 is very important. When price touches it, it always spikes. So it is very powerful. So you have to look at it. Please look at it. The method is not close, or the method is weighted close, HCC divided by 4, and the method they are applied to rather weighted close, and the method is exponential. Please be careful with all those things. If you don't get it right, it may affect the result you get. So you have to be careful with it. F plus, click on F, then F plus, click on moving average, then the value here is 22. Method is exponential. Apply to weighted close, HCC 4 divided by 4. Then the color is pink. Now pink. The 1, 2, 3, 4, the fifth column, fourth row. You click on it. Then done. This is the pink. Now let me show you something. You see, if you zoom out your chart, look at your chart. Look at this. This is a live record. Every time price touches the pink, look at this area. You see it spiked. Look at it when it touches it again here. It spiked. When it touches here in this area, you see it's spiked. So you see, when it touches this here, it's spiked. So most time, once price touches this pink in the 2 EMA weighted high, low, close, it always spikes. So, and if it goes beyond it, then you should know. If it goes beyond it just for a few minutes, then it will spike. Let's continue. Let's add other indicators. That's the power of that indicator. Now the next indicator is exponential moving average set to period 10, apply to close, color red. When this 10 EMA red crosses the 22 EMA, something happens. It tells you a trend will move far. Also, it gives you an idea where the market is going. It tells you the trend will move far, and also gives you an idea where the market is going. Note, it can also serve as a trigger point. A trigger point is the point where market reacts or where you can get a spike. So where you see where 10 EMA and the 2 EMA cross, expect a spike. Expect that the market will go far. So let's add it to the chart now. You click on F plus moving average, then the period now. Set the period to 10, exponential, but this time around close. Apply to close. The color red. Red is the 4th column, 2nd row. Red. Then click on done. You see? Look at this point. Look at this point. You see, the moment you see the red cross, the 10 EMA red cross this pink here, you see this point. Look at it. It's already going down. It shows you that, see, the downward trend will go down. It will go down a long way. You see, it's going down now. Now it's looking like if it wants to cross here. Once, if this 10 EMA and the 2 EMA crosses upwards, pointing upwards, just know that this buy will continue for a long while. You need to buy again for a long while. Do you understand, guys? See, when it crossed there, when the red and the black crossed there, remember, once the green candle touched the 22 EMA, it spiked downwards. And you see there was a cross between the 10 EMA and the 22 EMA. It started going down, until now, you see, it's about to cross up. Once it crosses up, just know that this buy will continue for a while also. Hope you understand this. It's that simple. Let's continue. Let's add other indicators. So the next indicator is simple moving average set to 19, applied to low. Please, this is simple, not exponential. Simple moving average set to 19, applied to low. Apply to low, color aqua blue. Apply to low, please. Now, it is a trigger point also. It is also used as support and resistance on lower time frames. When price touches this MA on lower time frames, M1, M5, M15, it reverses. So please note that all these instructions are important for you to understand the function of each indicator. So let's add that T. Look at, you see, the moment it passes, look, it just passes sometimes it might pass the 22 EMA sometimes before it spikes. So you have to be patient a bit. Look at just after 4 minutes, 1, 2, 3, 4, the 5th one is spiked. So you have to be patient a bit. So let's add the 19 EMA. Press of F plus, click on moving average. This time around, enter 19. The method simple. Apply to this time around close. Low, please, low. Then color aqua blue. Aqua blue is 3rd column. 1, 2, 3, 4, 5, 6, 7. 3rd column, 7th row. Then click on done. Voila. You see? You see this point, or virtually all of them they met here. See, the red, the 22 EMA pink, the aqua blue, all of them met here. It shows a strong change in direction of the market. So see, before market, look, the previous market was going up. You see, it was going up. It was going up. Look at when there was a cross here. You see, when the red crosses the 22 EMA here, look at it started going up. It's going up. It went up. Continue going up. Continue going up. Going up until it got to this point where it crossed down. Do you understand this, guys? You understand this, guys? So when you want to buy crash, these are the things you have to look out for. Some of the things you have to look out for. Want to buy crash. Once you see this happen, just know that it will buy for it a while. I will send a video on how to really other things to look at also. Let's continue. What's the next indicator? Next indicator is exponential moving average set to period 55. Apply to close. Color purple. Exponential moving average. Not simple. It's exponential. This one is exponential. When set to period 55. Apply to close. Color purple. It is a trigger point. If it misses, now if it goes to spike on the 10 EMA, 90 SMA, 22 EMA, the next will be 55 EMA. So once the spike does not happen in 10 EMA, 19 SMA, 22 EMA, the next will be 55 EMA. At every point price move, at every point price, every point price movement reaches this point, something must happen. At every point price movement reaches this point, something must happen. Let's add it and let's check it out. Now you press on F loss, moving average. Then this time around 55, simple, set to close, and then purple. Now purple, second column, third row. And then click on done. So this is it. So this yellow 48 EMA, this pink 55 SMA, 22 EMA, 19 SMA, 10 EMA, the red. So please understand each indicator, what it does. Now let's check out what 55, the power 55, the 55 EMA. Let's go back a bit. Let's go back a bit and let's see. There's no I can't find any perfect example here, but most times once price passes the 10 EMA, 19 SMA and 22 EMA, it definitely must spike when it gets to 55. So watch out for that. So let's continue. So what's the next thing? What's the next indicator on the next indicator? We are through with the main indicator now. Now we want to set up our RSI setting. So to do that, RSI setting is very important in trading boom and crash. You go here, you click on F, like as usual, F, and then you click on F plus. Then this time around you look for RSI, relative strength index. That's the meaning of RSI. Relative strength index is it. You click on it. Then you think period set to 6. Period is set to 6. apply to close, black, 3 pixel, nice. Then you edit the levels. The levels 90 sell, 90 sell, 97.80 strong sell, 2.30 strong sell, 5 strong sell, then 10. I want to delete some things. 10 sell. I want to delete these ones. Then let me change the color to black. The pixel, leave it as 1 or any style you want. Then go back, click on done, and then you have something like this. You like something like this. Now can you see? This is a live recording. See, when price got to the 10 EMA, you see spike downwards. So you see. So if price approaching this 10 EMA, you can enter a trade close to it. Once it gets there, it spike. If it does not spike there, it will get to this 19 aqua blue. If it does not spike there, it must spike when it gets to the 2 EMA. And it does not spike there, when it gets to the yellow 48, it will spike. And if it does not spike there, it cannot pass this 55 EMA or spike. As long as the trend is it's a downward trend, it's a bearish trend, a sell trend. Do you get this, guys? So let's continue. Now, also on the RSI, there is a setting. You have to put in some moving averages. So you use that indicator window 1. You go to that indicator window 1. You press to the F plus there. Then you press moving averages. This time around, you press the what do you call it? The period is set to 2. Simple moving average. And I can use color green. Let me use 2 pixel. Then done. Also, on this again, A plus moving average set to 3. Set to 3. Dark red. Done. Then also the last one, F plus window 2 moving average. Set to 1. Pink brown. Then done. So look at this. Observe something. Look at these SLCs. Once price gets to, once this 3 moving averages 1, 2, 3 reaches the level 10, you see, it always reverses. And look, once this the period 6 of the RSI, when it gets to, remember this is crash. When it gets to this level, when it gets to 90, you see, there will be a spike. It will come down. When it gets to this level of let's back test. This is what they call back testing. You're checking the levels. You see, no. When it gets, for example, when it gets to 9, 7, 8 here, you see this point, it spiked. Sometimes it goes beyond that. It goes beyond that. Look at like this one, because see, in this particular trend, it's a buy trend, so it was going beyond the 90. But most times, at the level of 90 or 97.8, it must spike. It must spike. So all those things before. If you want to enter a trade to spike, you have to check all those conditions. If it has gotten to 90 or 97, besides the other, besides using indicators, you can use this to know. So to know also if it is you can use these three MA coming together to know the direction. You see, once it gets to this point 10, it will start selling. But for this RSI, you have to zoom in to the last level to see it accurately. Zoom into the last level. Do we understand this, guys? Okay. Let's continue. Now, there are other indicators. The next indicators now we're going to put. Another indicator we're going to put now is, I want to set up the stochastic window. So we're going to use this stochastic. Now, you see, this stochastic setup for percentage K period 5, the period 3, slowing 1, low high, simple, style, yellow, green, 10, 50, 70, 90, 10 buy zone, 50 reversal zone, 70 reversal zone 2, 90 sell zone, style black, style color black. Now, this will tell you where, so that you don't leave so much money on the table. This will show you when to exit a trade. Mostly if you are buying crash and you are selling boom. Let's set up the indicators and I will show you on the chart what I mean. And now this video is becoming a bit long, but it's worth it so that you will see what I'm saying. Now, can you see again? Can you see this? See? When it gets to the 10, you see, when it gets to this 10, you see, it spiked again. When it gets to the 10, it spiked. If it passes this 10, it cannot pass to the 2 EMA to spike. I hope you are getting this. Now let me add the indicator. Stochastic oscillator. Set to 5, 5, 3, 1, low, high, simple. This. Then this, then done. Did you see that? Now, look at this. Look at this. Look at this. Every time the yellow SMA gets to 90 or beyond, it spikes. Now look at this. Look at this. As it's buying, please remember this is crash 1000. Look at, if we keep buying until the yellow gets to this 90 and crosses the green. Look at, when it gets to this 90 and crosses the green and continued, it did not cross the green continuously. Now, to know, look at it now. To know when the thing will stop is when the yellow crosses the green downwards. You see, it was buying from here. It was buying. Once the thing got to this point, once the yellow got to this buy zone, it bought continuously. It crossed the green upward. So once you see the yellow cross the green upward, it's going to buy. It was buying. It kept on buying. It will buy continuously until the green or the yellow crosses the green again downwards. And that time it is spike. Do you understand that? So, but if you want to catch spikes, you must watch the point where the yellow is about to cross the green above the 90 or the 90. Then set a spike there. Do we understand this? It's that simple. So, anytime the yellow crosses the green, there is a spike. You see? So please, it's that simple. So I'm going to do another video to show you how this strategy you use it to buy. You can buy crash and sell boom with this strategy. And also I will do a video on how you can catch spikes with this strategy. So set up your charts and let's have a great time. God bless you.